So I'd like to introduce you to a clicker that doesn't work. There we go. Let's see if this works now. Yeah, there we go. Excellent. So I'd like to introduce you to the concept of Section 12J. All right, so who's heard of Section 12J? Excellent. So I bet you a year ago that I asked you that question, it would have been half the people that lifted their hands. So the next question I have is, how many of your clients are asking you about Section 12J? Some? Less? Okay. Today I want to introduce you to a concept that we've put together and something that we think is going to be very exciting and interesting for you to offer to your service plan and your service offering to your clients. And the company is called Exponential Venture Capital Company. It is a Section 12J VCC. But the first one, I just want to take one step back and sort of paint the picture as to like, what is it, where does it come from, why is it actually being implemented in this country? And it really is surrounding South Africa's, the worries around growth, right? And I just want to refresh everyone's minds exactly where we are with this. So there was a lot of positive pictures painted here today. Ramaphoria coming into the market. We're looking positive about small and mid-cap space, but it doesn't sort of negate the fact that it's been really tough. So here's GDP. So here we can instantly see that sort of post-2015, it's been in a downward and sub-2% growth level. So this is really poor. From a GDP growth perspective, our country has struggled for many years, and if I plot this even further back, you'll see that the trajectory just continues down. All right. Coupled with that, we have high unemployment rates. Okay? Now you have a country that's not growing, plus you have a country that's not employing enough people. So you can see that there's a bit of a disconnect and a disaster. So Treasury and government has to sit back and say, listen, how do we plug this hole? You know, we keep raising taxes, we keep getting taxes in from investors, from retail clients. What are we actually doing with it? So I did some research, and here's an interesting anomaly. So in South Africa, there's approximately 2.8 million small to medium enterprises. Okay, this is your small and mid-cap space, and even further down in that ranking, right? So really the entrepreneurship flair of our country. Of those, they contribute to about 50% of our GDP. So of that 1.5%, 75 basis points is contributed by South Africa's small to medium enterprises. Right? I found it fascinating. I really found it very interesting. And then on top of that, I said, well, how do we plug this employment problem? And South African employment, about 60% of that number is contributed by jobs created in the SME market. Right, so now we can sit back and say, okay, South Africa's got a growth problem. We've got an unemployment problem. Where's the hole being plugged really? And it's this SME space, all right? So how do we currently support SMEs in South Africa? So there is tax relief. So existing SME businesses, if they fall within certain turnover bands, they get tax relief there. Further to that, there's entrepreneurship training. So the government puts days out, facilitates larger private companies to train smaller private companies on how business is done and the simple pitfalls thereof. There's government grants in place, money, funding available for them to grow their business and take it to the next stage, and then ultimately just general funding programs, including sort of crowdfunding. Right. So this is exactly where 12J funding assistance comes in. So Section 12J allows private investors the opportunity to get a tax relief, right, to invest in Section 12J mandated companies who can support these SMEs. So what effectively has happened here is Treasury sat back and they said, all right, we can either continue to just take all the tax money and put it in our bank account, or we can actually hand it back to private companies to make a difference in this country. Is there potentially better allocators of capital out there than what we are, right? So they piloted this project called Section 12J Investing. And this will result in increased economic growth and ultimately lower unemployment numbers for our youth especially. So it's a very exciting space for us. So what is a Section 12J? And when I say VCC, it stands for Venture Capital Company, all right? So a Section 12J, first of all, it's actually not a thing. Believe it or not, it's an act in the Income Tax Act. And believe it or not, it's Section 12J of that Income Tax Act. All right, so very creative naming in terms of putting this together. It is either a private or an unlisted public company, right? So you can get an unlisted public company. So it can take one or two of those forms. It invests in South African companies, right? So in the traditional sense, it is a private equity investment vehicle, right? It invests in unlisted companies within South Africa. It's a hybrid in our view between private equity and venture capital, just because of the type of opportunities that these companies may invest into. And then here's the kicker, right? There's 100% tax deduction in year one on your contribution. So you can see that this is starting to gain some interest in the market. The retail investors are like, I get 100% of my tax money back. You know, that creates some sort of incentive for us to further explore this. But we need to understand from a wealth management and a financial planning and an asset management aspect, where does this fit into, okay? Because we're giving advice on this. We're putting our clients into this investment. So from a low risk all the way down to sort of a high risk spectrum, we've got our traditional, and what we've heard this morning, traditional local cash, offshore cash. We move on a little bit further on the risk curve, we get bonds, all right? So you're taking credit risk and duration risk on there, slightly more risk involved. We move on to property equity. Property equity, as we know, this year has shown a little bit more risk than normal, but in general, it is bond-like returns with an equity exposure. We then get into traditional equity, local and offshore. We then move into the space called private equity. Okay, so private equity is where you invest in unlisted companies, right? Unlisted companies within the country, and this again you can do local and offshore. We then move into the space of venture capital, also the investment into private companies, okay? But the difference here is that these are generally more startup, okay? They don't have a long operating track record. They haven't been around for long. They might not have a product available to go to market. So they're making more venture in sort of space. And then lastly, what Chris will discuss later, sort of cryptocurrencies. So right there on the risk scale. If we just look at the vol numbers, I'm not judging. I'm just looking at standard deviation. That's me. So I've set the stage for you very nicely. So how does it actually work? A traditional 12J structure. Private investors, your clients, have the ability to subscribe for shares. This is a crucial difference, okay? So you're used to buying units in a unit trust. This is because you're investing in a private or unlisted public company, you're subscribing for shares. You are a shareholder in that business. Into the Section 12J VCC. That VCC is then mandated to provide equity finance to South African private companies, which we call qualifying South African companies. By investing in those companies, you'd hope there'd be some dividends and capital gains tax returned back into the company, the 12J company, and ultimately, because you are a shareholder within that entity, you then get that returned back to you. So very private equity type structure, obviously with a massive tax benefit for investing into the 12J. All right, so given this, how has it actually evolved? So believe it or not, Section 12J has been going since 2009. It's not that new. I mean, next year it would be 10 years. The problem was in 2009, the tax deduction wasn't very clearly stated by SARS. There was a lot of lobbying going on. And really in 2015 is when the Section 12J in the Income Tax Act became palatable for investors. The deductions were properly understood. The tax benefit was there in year one. There were no deferrals and so on. So first of all, so since 2015, which is really when 12J started getting a bit of traction, believe it or not, there are now over 100 registered Section 12J VCC companies available in South Africa. You walk out that door, you can subscribe for shares in those companies. That's a hell of a lot, okay? And that grew rapidly fast. It's also moved to 3 billion. 3 billion assets under management. Now, in the bigger scheme of things, that's really small, okay? The entire industry is less than 3% of the entire unit trust industry in South Africa. Tiny, okay? But the scope has been large. So last year, November, I attended a 12J in Durban conference, and there they had guesstimated that they did about 1.5 billion total AUM. So between November and the next raise now in February, they doubled those assets. Okay, so there's definitely becoming some attraction and some questions around this. And then lastly, there's a sunset clause. Okay, so this is not a type of cocktail that we'll be serving later. This actually means that if you do not subscribe for shares in a Section 12J, by June 2021, the tax deduction no longer counts. Okay, so obviously Treasury said, we're going to pilot this project from 2009, in reality, 2015, up to 2021, and say, okay, let's measure the GDP growth, the unemployment figures, and the benefits that we've generated for not taking the tax into our own pockets and mandating it to private companies and other allocators of capital. I'm of the gut feel that if there are really some good 12Js coming through and investing in the spirit of 12J, that this deadline will be pushed out. Okay, In the UK, we saw something similar, and they also had a sunset clause, which they've completely abolished now. So the system works so well that they continuously allow it. But here's a problem. So now you're sitting there, and I can guarantee you those that have been questioned by your clients on which 12J to invest in, what are the risks in 12J, which one should I back, which ones are going to make it, which mandate is interesting given the current demographics of South Africa. It's hard to choose. It's really hard to choose. I mean, I've had on occasion about 5 or 6 colleagues and friends phone me to say, listen, I got a tax problem. I need to invest in a 12J. But believe it or not, I don't actually want to lose my money once I've invested. So where's a good one? So we decided it would be really clever to combine the available 12Js in the country into a model where we do all the risk. We do all the work and all the research to make sure that you get a fully constructed portfolio of 12Js that we know are going to generate return going forward. Right. So enter the multi-managed Section 12J VCC. So I'm going to paint you a picture of how this one works versus the traditional. So we're all comfortable with what the traditional one looked like. Fairly simple. The multi-manager would look like this. So you get private investors, once again, your clients in the market. They subscribe for shares in Exponential Section 12J VCC. Cinnabar has been allocated as the investment advisor or investment manager to the 12J. Right? So very important. There is a board, and Cinnabar is part of that in order to manage the investments that take place within Exponential 12J VCC. The difference here is that Cinnabar has done the research on all the available 12Js and is continuously doing research as new 12Js come to the fore to find out which are the best for which mandate, whether it be renewable energy or technology or small business startup, and how can we combine them in a solution that you effectively have a diversified Section 12J, a diversified exposure to various sectors in the market. So lo and behold, we've got Section 12J Manager A, for instance, B, and C. And these companies then invest in qualifying companies, right? So we're co-investing with managers that we're finding in the market in order to create a diversified, exponential Section 12J VCC in which your clients can invest into, right, and still get the tax benefit. So this relieves a lot of the problems that we're having out there of doing all the due diligence, the research, the portfolio optimization of those 12Js available. So I suppose at this point you really want me to share with you some of the opportunities that we have found. So we've really just started scratching the surface, and we're finding more and more interesting 12Js out there. But these are some of them that we've had a look at. All right. And the first one I'd like to introduce you to is Kalon Venture Capital Company. This is really focused on tech startups and fintech businesses. Right. So everything generating sort of technology services in and around that space. There's a highly acclaimed board attached to this. Some of the board of directors was involved with Creative Council, was involved with Popeye Media. Some of them you may even have seen on Shark Tank, if that creates any credibility for you. But really very focused on this technology industry. And I think last year I read something in the paper that said 2017 is the year of the app, right? So technology is definitely something that's pushing through into all different sectors. And I can say this fintech space, the more and more you start dealing with suppliers, and so the more it's becoming online and app driven. So I think this is a really exciting space to be in. And just some of the investments that they've made. So they've invested into a company called iPay. So iPay you would have seen on Takealot. I'm sure we all shop on Takealot at some point. Check out by credit card, eBucks, etc., and then eventually get to iPay. So iPay is a system engineered in order to use an EFT mechanism to pay without entering any secure details. Right, so a lot of payment gateway technology in there. They've invested into another company called the Sun Exchange. So the Sun Exchange is a system in where solar energy is brought into retail homes and spaces to become subcontractors of that. So very exciting, sort of that renewable energy space. Another business called Snap and Save. Right, everyone loves a coupon. Right, you cannot tell me that at any point in time that someone shows you a coupon and gives you something for free that you're not happy about it. Somebody is happy. You feel like you're winning. You know you haven't won, but you feel like you're winning. Snap and Save is exactly that. It's an app that generates coupons for you in the various shops that you go shopping in. All right. It's mobile driven. It's effectively paid for by the suppliers of the products. It's a very innovative way in which they've combined app technology driven with consumer shopping desires into a profitable business. And the last one is a company called SMEasy. So SMEasy, an accounting software package specifically for SMEs. So it really goes quite nice with the Section 12J spirit And what it aims to do is it translates all that jargon, debits, credits, contingent liabilities, deferred tax, etc., into things that SME businesses and entrepreneurs can actually understand, and an accounting system that they want to use. Right? The biggest problem with investing in small businesses, you're going to find their financial accounts on a piece of tissue. All right. This really avoids that happening. So very exciting stuff. The next company that we had a look at is called 670 Venture Capital. So 670 Venture Capital is tied, or not tied to, but backed by a company called TBI. So TBI has been in private equity for years and years and years. They're actually involved with Sanlam to an effect as well. And TBI's investment team and board of directors has over 170 years of combined investing experience. Okay, both in the listed and unlisted space. So very impressive track record and some highly acclaimed board of directors there. It's a fairly new fund, so they haven't done any investments yet, but their focus is going to be on renewable energy and putting renewable energy into corporate office parks and shopping centers. So it's got a nice ESG flavor to it as well. The next company that we had a look at is called Nuvo Investments. So Nuvo Investments is really what you think about when you think of growing small businesses in South Africa. Okay, these typical owner-run, owner-managed businesses, the true flavor of entrepreneurship in the country, from a diverse range of industries. Right. Also a very experienced board of directors, and what's really interesting here is all of the board of directors actually are involved in business rescue as well. Right. What's the benefit here? They understand the pitfalls of small businesses. So if they can get involved in businesses and help them avoid these pitfalls, surely there's a natural progression to better growth for them. Right. So we like that flavor. Some investments they've made. So the first one is Mastercare. Mastercare provides care plans for your electronic household goods. Right? Computers, laptops, speakers, TVs, etc. They're invested in a business called New Mobile. So New Mobile makes smartphone contracts available to blue-collar workers. Right. I think there's an interesting statistic that says almost everyone in the next 5 years will have availability to a smartphone. So we'd be able to have conversations with people in a much smarter fashion. So this is just one way of getting that statistic up and running. They've also invested in a company called Medac. So Medac supplies medical bracing to retail. Right? Interesting business. And then the last one, which I find fascinating, is they've invested in Cape Mohair Company. Okay, the Cape Mohair Company, they make socks, right? Fashion socks and medical socks. So really, you can see a nice diverse portfolio within there as well, giving you good exposure to various sectors and really that traditional entrepreneurship flavor. And then the last one that we had a look at so far is a company called Concentrated Capital Partners, or CCP. All right, so this is a very interesting and very different flavor to Section 12J investing. And the first pointer thing, it was founded by Stockdale Street's client called DRA. So the first thing you got to sit back and say, who's Stockdale Street? Does anyone know who Stockdale Street is? So it's the private equity advisors to the Oppenheimer family. Okay, so money tends to not be a problem for them, and they've done a lot of these unlisted investments naturally. Right, so their client, DRA, engineering consulting company, has actually started this Section 12J investment vehicle called CCP, or Concentrated Capital Partners. And what they believe is they think there's a lot of waste in the mining space. Okay, mines get excavated, dumps happen. There's lots of resources in that dumping that's not being used. So what they're going to do is they're going to use 12J to finance tailings projects, all of these. So you're getting extra resource out of the ground that was going to get thrown away. So there's an environmental impact there. Plus you already have a natural buyer for that resource. Okay, so a very clever structure. And the way they're going to invest is through equity, but it's going to be in a mezzanine debt type fund. So you're going to have the resource owner taking equity into it. You're going to have the 12J taking equity into it. And then lastly, you're going to have the big banks putting senior debt in there as well. So what you're doing is you're getting equity-like returns with bond-like risk. So we really like what they're doing there, and we think it's very interesting. Also, they're going to be focused on doing tailings projects for really the big mine. So, I mean, we never say something's impossible, right? But the chances of the country allowing these really big anglers and Glencores and that to fail is fairly limited. Okay, so we think there's limited risk within the structure as well. So some interesting guys out there. Obviously, there's a lot more that we continue to do research on, and we're meeting 12J managers on a weekly basis to make sure that we're going to have the best of the best within the portfolio. Some things to note. So the first thing is, yes, you get 100% tax deduction in year one. Okay. It's nice to invest to get a tax deduction, but it is important that you invest with fund managers that is not going to lose your money. No one wants to lose money, okay? Tax benefit or not, very important. The second thing is there's a 5-year lockup, okay? So SARS has said, if you invest in 12J, we'll give you the tax deduction, but you must stay invested for 5 years, right? If you disinvest before that, you're liable for that tax repayment back to SARS, okay? Which we think is right and we think it's fair. No impermissible trades. So SARS has said, okay, there's certain sectors of the economy that doesn't need any help to grow, and they've listed them. So no immovable property. Okay? So you can't invest in immovable property, but you can invest in hotels, okay? So you can see there's a few Section 12Js that have taken advantage of that, how can you say it, definition of hotel, and some Airbnbs might have snuck in there. So you just got to be careful of that. The other thing is financial services, gambling, tobacco, liquor, arms and ammunition, and obviously no trades outside of South Africa. So they want to support South African growth. The next thing is, after 3 years, your investor or your client may not own more than 20% of the shares in the VCC. Right, so technically not your responsibility, but very important to consider for the overall 12J, because it can bring the whole thing into question. Right, they don't want any connected persons. And then lastly, and this is sort of an important one that people tend to forget, when you subscribe in the 12J, your base cost goes to 0. Right? Invest $1 million, 5 years, let's assume you just get your $1 million back, you will be capital gains tax payable on that full $1 million. All right. So very important. Your base cost does not carry forward on that. So important caveats to note. Still, I think a very attractive asset class. And I'll just show you a return profile example that we've put together. So very basic. So investor A comes across. He invests $1 million. So because SARS has given him his tax deduction payable back, and he's in the 45% bracket, he gets his 450,000 Rand back in year one, right? So his effective net exposure is 550,000 Rand. The 12J that investor A is invested into, they said, okay, well, we're going to give you 5% in dividends per year, which you can take out, plus we're going to aim to grow the capital by 5% per year over the next 5 years. So fairly conservative assumptions. I mean, private equity shoots for much higher returns than that, but we did it on a conservative basis. So there, year one, 5% dividends. The company pays dividends withholding tax, so you get roughly 40,000 Rand out. All right, we go all the way along up to year 4. Year 5, you get your last dividend, plus you get your capital back, compounded at 5% per year. So gross investment, roughly 1.3 million. You now have to pay capital gains tax on the whole amount. So there's your tax outflow, and you get roughly 1.1 million back. So just to recap, you've effectively invested 550,000 Rand. That's the only risk capital that you've put in. You've got the other money back from SARS. Every year you've got a bit of a dividend. The final year you get a bit of a dividend, plus you get your money back at 5% per year. So the IRR works out to 20.49%. The tax deduction alone accounts for roughly 8%. So it's a very exciting industry, and it has the capability to provide decent payoffs to investors. I'm sure we've got a few questions. Yes, Gary.
Forgive my ignorance. The SMEs that qualify for this, do they have to be defined?
No, not at all. So there's obviously they're not allowed to be an impermissible trade. So those that I mentioned, financial services, tobacco, arms, etc. And the balance sheet of the business must be less than 50 million in size. So they're looking for the smaller businesses. In the mining space, junior mining, they can go up to 500 million in balance sheet size. That's the only qualifying criteria. Frank.
Who's the regulatory overview? SARS?
So it's twofold. So it's SIPC. So SIPC in terms of the Companies Act, because it is a private or public company, and the FSB. So you need to be an FSP1 to be able to open such a fund.
Actually, also 3. I mean, SARS, when you apply for the 12J, it's to SARS. So there's 3 that are involved. So it's
stiff regulation.
Yeah, I mean, safe. It's still. Looking at share max and invest and that sort of stuff. No, but I remember this is not necessarily valued. It depends on the underlying businesses, because this is out there on the risk curve. You're likely, depends on the kind of businesses. If they're existing businesses that pay dividends, then you could have a flow of income back. But if it's a pure venture capital kind of one, it's the hockey curve. It's the J curve. It goes down. There'll be money going into those businesses, and you're looking for that 10 bagger. That's sort of the space. So we're trying to blend out the risk. We don't want just that. We want to blend it out. So there's definitely risk. That's the reason why we're doing this, is because people say, which one's a good one to go to? We say, we're not telling you which one, and you shouldn't tell your client either which is a good one, because there's no track record. It's a lot of the research we're doing, and the DD is new stuff. So
Tim,
risky.
yeah.
What's the minimum investment?
Normally
it's 5 million.
So every 12J has a different one. So it can range from 100,000 right to $1 million. And we're probably going to be pitching at probably 100 to 150, somewhere there. Yeah, for exponential minimum entry, yeah. Yes, Evelyn.
Is there a minimum age, you call it then, of the SMEs that are being invested in?
So it's a complete broad spectrum, right? So you got Kalon that's investing in as little as a startup, just an idea. And then you've got other businesses like Anuva that are investing in owner-managed businesses that have been in South Africa for 20, 30 years that need a succession plan. So it's anything that needs to go from current growth to next scale growth in order to generate more jobs and GDP growth within the country. That's the flavor that SARS is trying to bring out. Yes, I want to.
Can you stay for longer than 5 years?
Definitely. So you're not required to sell out, but you can from that period. But you also got to start understanding from the 12J how they're going to provide liquidity. Right? So that's the next thing. It's not a unit trust. It's not daily traded. So in 5 years, how do these guys provide you liquidity? So many of them are talking about listings. So either we're going to be seeing another 100 long for lives on the JSE soon, or they're actually going to enter into structures where they have bigger private equity funds where they can sell on the assets into, create liquidity on the 12J. But yeah, so you can stay in longer. What for the assets? So it depends how that 12J would realize the assets, but the company effectively buys back your shares. Or you could sell it to another guy.
It's a share in a PTY, so you can sell it to anyone you like. Sell before 5, you lose your tax, you have to pay the tax back. Sell after 5, you can sell it to whoever you like.
So before 5 years,
Tax
The
back.
rules of 12J. You sell out before 5 years, you're going to have a tax. You're going to have to pay the tax back.
Mark.
We might be a bit early, but have you developed a pricing structure for the Cinnabar?
Yeah, no. So we don't have a fixed pricing structure, but it's probably going to be around the 1.5% mark in terms of that plus underlying cost.
And then you'll have segregated mandates.
Correct. But we would have benefits of scale, so we'd be able to negotiate much better pricing with the underlying managers. Yeah. Yes, Evan.
can you withdraw gradually to spread your capital gain liability?
Potentially after the 5 years. Yeah, I wouldn't see why not. You own a share, you're just selling parts of your share over time. Effectively, you hope that you've invested in a 12J that makes enough return so that your capital gains tax is made back already before you have to pay it on the full place cost. Cool. We're going to have to shift on
You
to
can take lots of questions on this
crypto.
afterwards. So we'll be around.
5-second question. And then I'll go.
When the JSE invests into a company, is it in the form of debt?
The JSE.
Yeah, the management company, the manager,
Okay.
is investing and lending money to a startup.
Oh, so you're talking about the 12J company. So it has to be equity finance.
Equity.
Yeah.
Do they exercise control over that company such that they're on the
Not
board?
always. No. So that it will range. Some guys will take as little as a 5% exposure in a company. Other guys will insist to own 51%. So it's a complete mixed bag.
If they've got 51%, then they
Control. Very much so. But I haven't seen many that take that bigger stake. Many of them are sort of operating in this 15 to 30% stake.
There's a huge range. That's the thing. These 12Js are a massive range, and that's the risk. Is that you, without delving deeply into it, it's hard to understand what's really the risks. So that's what we do. Okay. Thank you.
Cool.
Next
Thanks,
week we can take.